I'm Tracy Tucker, and this is Discover Flint Township, brought to you by Flint Township Economic Development Authorities, HAP, Shea Automotive Group, Financial Plus Credit Union, Guaranteed Rate, and 103.9 The Fox. I am here with a good friend and a new friend. We have Dione Oliver, the mortgage lady here from Guaranteed Rate. How are you?
Good morning, Tracy.
Good morning. How are you today?
Wonderful. Just happy to be here.
I know. Every day when it's sunshine is a good day, right?
You know what? I love it. I don't know that I love the humidity and, sweating, all day long. But thankfully, they've got our air conditioning fixed in the office now. So it's going to be a better week than it was last week.
Well,
hopefully.
That's good. And we also have a new friend here today. We have Monica Howard from Prime Real Estate Agency. How are you today, Monica?
I am doing pretty good. Thank you, Tracy.
Yeah, it's great to meet you. And Monica is going to be our business spotlight today. And because she is a Flint Township business, we love having you here.
Thank you very much. I love being here.
Yeah. So we're going to talk a lot more about her business in the second half of the show, but we're going to start out with Dione. And got to tell your NMLS number.
Oh, yeah. So Dione Oliver, the mortgage lady, NMLS 169474. I can be reached at 810-625-7381.
All right. Now I'll ask you, what do you want to talk about today?
You know why? One of the reasons why I wanted to have Monica here is I wanted to have a fresh perspective from a real estate broker, agent, somebody that has been in the business for many, many years, which completely and totally describes Monica Howard. I've known her for a very, very long time. She does a wonderful job. And, with the rising rates and the economy that we're facing, we still have a ton of buyers, but it's slowing down. It is. Right. The market is taking, I think, a little bit of a step back. I mean, I still feel that we've got a lot more buyers than houses for, the market.
Yeah, stock's the real issue. How much housing stock you have, right?
Well, 100%. And another thing that's kind of slowed us down a bit, I believe, is with the rising rates. Somebody that I may have had pre-approved for $200,000 when the interest rates were, in the fours and the APRs were around 4.4 or something. Right. Now you're looking at between 5.5% and 6.5% with APRs of anywhere from 5.8 to 7 sometimes, depending on the the client's credit and such as that. And so one of the things that I have had to do now is go back and revisit all of my buyers, which, I mean, keeping in touch with your buyers, your pre-approvals is always a great thing anyways, but having to break the news to them is, I'm sorry, you need to tell your agent that you're no longer approved for $200,000. Now you're approved for $180,000 when the market is where it is. It's disheartening, along with the other things that are going on in our economy and are going on in our country. So, that's one of the things I wanted to bring Monica in for, to get a perspective on where does she feel that our market is headed. How is she experiencing her pre-approved buyers with other lenders, and has she received any of those phone calls? I'm so sorry, Miss Monica, but, our client is no longer approved, or our client is no longer approved for this amount. And, just kind of, you want to touch on that a little bit. Yes, ma'am.
That is exactly what we're experiencing that's exactly what we're experiencing in real estate, in which we have those buyers. These buyers right now are being beat up.
Yes.
They have been beat up for, last year it was ridiculous. And so now you have buyers who have gone through this,
the gauntlet.
Yeah, that's exactly right. It's a gauntlet in which, they've been putting in offers, and it's competing against multiple offers,
right?
Actually competing against buyers to get a home. And now on top of that, they're being told that their buying power is lower. Also, the terms of their loans are different. Mm-hmm. And we just had one went under contract and found the home. Fantastic, beautiful home. But the thing is, their terms changed. They were still able to get that amount of money, but because of everything, their debt to income changed. So now, instead of them purchasing the home and just taking their time moving in while their home sells, they are required to sell their home before they can purchase that home. Now, here's the other thing that's happened, is that it does not just affect the buyers. It's also affecting the sellers of these properties that have houses under contract. Because now what's happened is, and I'll use them as an example, that seller is looking at them and saying, I don't know if I think maybe I can do better. Perhaps we can do this or that because our loan has changed. Now that seller has the right to say, I didn't sign up for you having to sell your house first. And that gives that seller an out to say, am I going to stick with you? Am I going to go elsewhere? But as I told her realtor, it is across the board.
Yes,
this
it
has
is.
happened.
Well, and it can change the terms of the rate of the sale, right? Like the cost of
Absolutely.
the house, because now there's a change in the terms, so now they might have to renegotiate.
You can renegotiate. That's exactly
Yeah.
it.
The only
That's
benefit
ugly.
that
That's
I
ugly.
see is now that's one more house on the market that people can put bids in for. I mean, if you want to look at the other side of
Yeah.
it, you know, I see so many buyers today, and even in this market, they're not listing their house until they have something to move into. And then they do it. And it ends up being a simultaneous, closing, even though it wasn't meant to be. Because what is the time frame right now that you're seeing houses stay on the market, even today?
Today it's gotten a little bit better. So I would say under 4 days.
Yes. So you have to think about it like this, even though the terms of that loan changed, and it does put that seller in a different predicament. You know what I mean? And I know as clever as you are, Monica, you might say, if it were your seller, for example, do a first right of refusal, right?
Right.
So basically what that means is, and you explain it because you're the agent and not me.
The first right of refusal is you can present someone with an offer. Or excuse me, I'm sorry. Let me take that
that's
back.
okay.
Someone, before I can sell my house to this person, I have to say, okay, look, here's the deal. House is for sale. If you can get it, you have to accept, and we have to negotiate something right now. You have the first. Let me just put it simple.
They can refuse it.
They got dibs. They got first dibs.
That's a
there
good
we
way to
go.
put
I
it.
like
Yeah.
it. I like
First
it.
Yeah,
dibs.
so in
I got
her
dibs.
so in her example, so she's got a client whose terms changed, who didn't have
Right.
to sell their house before,
Right.
but now they do. And so that seller can now say, you know what? Okay, so we understand the market. You're 4 days usually on the market. So what we're going to do to protect ourselves is this. If you can't sell your house and meet the terms of the original offer, we're going to give you the first right of refusal, meaning that if you can't sell and sell yours and close on time, then we have the option to accept another offer. You can then close, and if you can't, then it goes to the next person in line. So that's where the dibs comes in.
Right.
And so there's a lot of different negotiations going on, and the only benefit that I see that we still have is the amount of time it's taking to sell a home, which is boom, 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 which is why people aren't listing their home until they find another one.
Right.
And it's like a dog chasing a tail. I hate to say
Yeah.
it. You know what I mean? Because if you've got 10 buyers for every one house, I wrote pre-approval letters last week. 3 of my people bid on the same house. Do you know how hard that is? Because, I can't say anything to anyone, right?
Yeah.
I mean, I have my confidentiality that I have to
Right.
keep. But then it's just like, okay, now I'm writing 3 pre-approvals for the same house, and I can't tell that agent that. I can't tell the buyer that. Just may the best buyer win, I guess.
Yeah.
I don't know. So it's just a crazy, crazy market anyway. The ball bounces, even
Well,
still.
and you don't dare sell your house if you don't have a house already that you're going into, because you might not be able to find a house
No, you might not. You might be living with your
because the
in-laws.
market is so tight. Yeah. No, thank you.
Yeah. Yeah. So in addition to that, Monica, give us a little bit more perspective on where you think it's headed as rates continue to rise, because we're not seeing any relief anytime soon, and inflation continues to rise. Where do you see the market going?
You know where I think we're not going to go back to 2008 where the prices take a dive. There's no way. We still have a lack of supply, and we
Right.
still have all these buyers who want to buy.
Right.
I think the difference is, instead of people just throwing money at these houses, you won't see as much of the $20,000-$30,000 over asking, because these interest rates are going to make people calm down.
Right.
And so what you will see, I think we are going to get buyers to pull back a little bit and wait. I think the housing prices are going to level off. I think people who didn't have a chance are going to have a chance, because you don't get people who are dipping into things like 401s or dipping in the savings and guaranteeing appraisals. You don't have all that desperation, that panic. So it will begin, I think, to level off just slightly, where it won't be back to normal, but slowly we will get there. And please don't get me wrong. We are not headed towards a buyer's market.
No.
I don't even think we are headed towards neutral. We are just no longer in that panic stage. This past summer, house would come on the market. Within hours, my clients would call me, we've got to go see it today, because they were going so fast.
Oh, yeah.
Over the last few months, it's begun to calm down a little bit. Well, calm down, if I can make up a word, a lot of bit. and so now we're getting where we can see them. We see houses that are on the market for more than 2 days, and they don't have an offer yet.
It's opening up our market to our government buyers, to be honest with you. Like my government, like the ratio of conventional versus government right now, believe it or not, I'm at 54% government loans versus, you know, where we were
crazy.
about 70% conventional. And I mean, and I'm thankful for it. I think I've got 5 VA loans right now. I don't know that I've ever had 5 VA loans all at the same time, and I have them right now. FHA and rural development are the same. We're seeing a lot more down payment assistance programs. Like, you know, I do Chinoa, the down payment assistance programs, and I'm seeing a lot more of those being accepted, not just for myself, but for the other VPs, Jeff Laux and Donna Creason, that work in my office as well. So when I'm looking at that as an overall, it's really exciting.
Playing producer Dione. Hi, it's Rusty, everybody. Explain government and conventional.
Yes. Okay, so a conventional mortgage is typically we do have programs for first-time home buyers for conventional. The government guidelines are a little bit more strict, but they also allow buyers who have had more of a troubled credit history, who have had, let's say, a bankruptcy or a foreclosure. There's a 2-year waiting period for bankruptcy on FHA. VARD, where conventionally there is a minimum of a 4-year. If you've had a foreclosure, it's a 3-year wait time for a government loan in most cases, and conventionally it's 7.
So when you're talking about that, are you seeing a lot of movement from people who rent to people wanting to buy?
Oh, absolutely. Because right now you can buy a house even with these interest rates cheaper than you can rent.
Right.
I mean, hands down. And the other part of it is there are very few houses to rent. They're just, I mean, and
people are just selling them.
It's dog eat dog as well. But, you know, to even get back further to the point of the difference between, you know, conventional and government, for a government loan, I can go down to a 580 credit score. Conventionally, you're at 620. Right. And then the interest rates for FHA, VARD, for somebody who's under a 640 credit score, is going to be very, 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 you know, competitive and good. The mortgage insurance premiums on those loans, well, VA, you don't have one. Rural development is a 0.35 factor. FHA is a 0.85 factor. So you still get the same great rate on an FHA VARD at a 640 or less. But with a conventional, your rate's going to be higher. Your mortgage insurance premium is going to be way higher because it's regulated for RD. It's regulated for FHA. Conventional is based on your credit score.
And also, I'm glad that y'all brought that up, because before these interest rates just exploded, we were, as realtors, we're seeing where listings are saying cash and conventional only. And that is shutting out, just like Dione said, shutting out FHA, VA, those type of things. All
now,
those.
why were they doing that? Is it because it was the length of process is longer for FHA?
I believe
as
that
a seller, why would I care where my buyer's getting their money?
So there's multiple things. Okay, some of it is a miscommunication with the difference between what conventional requires and what FHA requires. So like back in the 70s and 80s with an FHA loan, you had an inspector come out and they would shred your house, like every teeny tiny little thing. Today, what FHA appraisers are the same people as conventional. You know, like the people that we work with that are very well known in our county for the appraisers. They're appraising FHA, conventional, RD, VA has its own set of, appraisers. But what they're looking for is there's lead-based paint disclosures for anything that was built prior to 78, right? But if there's any chipping, peeling paint any type of rotten wood, anything like that, that an FHA appraiser or an RD appraiser sees, they have to call that, which now then means that the seller has to fix it. With the conventional, they're not going to call peeling paint. They're not going to call, well, they will call anything that would be a safety hazard. For example, I've had 2 conventional mortgages within the last couple of months where the appraiser made note of a safety hazard, trip hazard, broken window, and said it's still as is. But as a lender, we're responsible to, as a collateral, underwriting lender, we are responsible to say, wait a second, if a young child, let's say it was a deck, for example, if a young child were to be up on that deck and because the wood is rotted, that's a safety hazard. That's going to come back on us as a lender. If Fannie and Freddie get a copy of that appraisal, which they do, and they see that, then they can come back on us, and they won't, buy the loans, for example, because we're direct with Fannie and Freddie.
Right.
FHA, the appraisers have to call it. That means it has to get fixed. In this particular case, conventionally, we called it. We made the seller fix it. The seller refused to fix it, so the buyer fixed it. That's the kind of some of the differences between FHA and conventional.
So that's why they were saying cash or conventional.
Well, yeah, but the majority of the houses.
Thoughts of what.
Why? Yeah. And it can
triggers are-
sometimes be a longer process. But I'm going to just tell you right now, with the 5 VA loans that I have right now, we've gotten them done in 2 to 3 weeks, unless there was an issue.
That's quick.
Yeah. Now, the last couple that I've had, one of them had a repair, one of them had a water test where we had to have it chlorinated. We still closed it in 3 weeks. It's just a misconception. And not all lenders might be like that. I don't know. But primarily, I love government loans, and we have a really, really great system in the way that we work it.
That's amazing.
Oh my goodness. I'm so glad to have this conversation because you will see in many of the listings, the realtor will put in there excellent condition. I've gone in homes, nothing wrong. So part of this, we can't even say it is truly on the loan itself. I'm a realtor. I'm going to call out those realtors. Those realtors are also, they have the wrong information, or they're feeling that, well, a conventional is going to go faster because there are some homes in pristine condition and they still put cash conventional only. And that is not a seller, because it is that realtor saying that. That seller doesn't know that you're shutting out people who work hard every day.
Well,
they're shutting out
like
VA.
I said, as the seller, I want somebody to buy my house.
Right.
That would be my concern. I want somebody to buy my house, and I want it to, obviously I don't want anything that's going to cause issues, but it doesn't sound to me like the FHA is like it used to be.
It's definitely not 100%. Guys, I'm not going to say that there is not, that conventional isn't better. I don't think that it's better. Sometimes it does go faster, but we've got issues with conventional mortgages sometimes the same way we do with FHA. It's just it's a little bit more of a risk, but like Monica was saying, if you've got something that's in excellent condition, what our appraisers aren't out here to kill our deals regardless of what others might think. They're not. So I'll give you another example of something we've got going on right now, and it applies to FHA, VA, and conventional. We've got a fast track system going right now, a fast track loan. So this is a true story. I took an application from a client on Friday, put in a large sum of money down, excellent credit, reserves, and we don't need an appraisal. So we're getting appraisal waivers sometimes on our purchases, quite a few times actually. So we will be clear to close. What's today? Tuesday? If we're not clear to close today, pending title work coming in, we will be clear to close tomorrow pending title work.
Wow.
I'm not joking. It's the fast track. It is
Oh my
it is an amazing product. So what happens is, instead of having a processor, an underwriter, a back end processor, or a closing coordinator, you deal with one person, that's the underwriter. So we take application, we send it in, the fast track underwriter picks it up. If all the documents are there, the buyer gets all of those documents back within 24 hours. He gets a $250 credit.
Wow.
And then it will come out clear to close pending. If there's an appraisal, we wait on the appraisal. If there's title work, we wait on the title work. Other than that, we are closing loans in 6 to 7 days, left and right, sometimes sooner.
Wow.
That's fantastic.
Yeah. So
That is
call the mortgage
fantastic.
lady. Let me tell you how it works, realtors and people out there. You can reach me at 810-625-7381.
Yeah, that's funny. So Dione always gets it out there, doesn't she? Yeah, I love it. But that's a fantastic product to be able to
and
offer.
it is something that our company, Guaranteed Rate, designed. The CEO of our company, Victor, he wanted to do something to make us more competitive. We have another program. It's called Red Arrow Connect or Power Bid, where if we've got a buyer, and we're up against how many offers, right? So I can send in a pre-approval underwriting. You don't have to have a house as to be determined. Have you completely underwritten? All you have to do is now you send in your offer and you say, okay, Monica, my buyer is not just pre-approved, fully underwritten, pending approval of the appraisal and the title work. So now you go to your seller and you say, this buyer has already been through credit, income, and asset underwriting, completely approved. All we have to do now is get the appraisal and the title work, and we can close. And it doesn't matter if it's an FHA, a conventional, a rural development, a VA. We can do it with all of them. That also cuts down the time of your, closing, right? So I can say, we can close in 2 weeks on any loan, because you're already underwritten credit. I have one of those going right now too, and it was FHA, and it was a multiple bankruptcy situation. You can have multiple bankruptcies, right? So you can file a bankruptcy, I don't know, every 10 years or something like that. This guy's had multiple bankruptcies. He's worked really hard to get his credit up. He's got money. His credit score is fine now, but we still have to explain all of that. And so in an effort, knowing what I was going into, in an effort to make it where my buyer was the strongest on the table, that's how we got our offer accepted. The listing, or the buyer's agent, went to the listing agent and said, this is from Dione Oliver. She has already set her buyer through underwriting. Here are the conditions of the loan. We can share those with the buyer's permission. All we need is an appraisal and a title work. And it's an FHA loan. We're closing in less than 2 weeks. Wow. Boom.
Boom. Boom, baby.
Mic drop.
Yeah, right. Literally, Trace.
Bang.
Yeah.
So wow, that's amazing. And so from the other side, you have Monica with Prime Real Estate Agency, located in Flint Township. And so we're gonna kind of flip the switch and look at things from the agency and from the agent and broker's perspective of what's going on right now. But first, I want to talk a little bit about your company. Where are you guys located?
We're located at 3499 South Linden Road, Flint Township.
Yeah, Flint Township. You got it.
You mean give the zip code 48507. So we're right there on Linden Road, just before Bristol Road.
Yeah, you're in between Miller and Bristol
Correct.
on the east side of the road, right?
Yes, correct.
Did you do never eat soggy waffles?
I didn't think about that. Where can people, let's get your information out to. Where can people contact you?
Well, they can contact me at 810-820-4124. And my email address is Monica at oneprimeagency.com.
All right. Awesome. So now we got that out of the way. Let's continue this discussion a little bit. You specialize in commercial or residential?
We specialize in residential.
Yeah. This is right in your wheelhouse.
Exactly.
Talking about these.
Exactly.
How are you seeing your clients affected by the rate change? Because we kind of talked about that a little at the beginning.
Well, with the rate change, we have had some that have decided to drop out until
that's too bad.
It is until they can save more. But here's the thing: even if you save more, these interest rates are up higher. So you're at a push, and more than likely come back into the market. Where will the interest rates be? So the money that they are going to save, they're losing it on the interest rate.
Well, and one of the things that people don't understand is that for every $1,000 that you spend, depending on the interest rate, you're somewhere between $5 and $7 a month per $1,000. So they can save up another $10,000 to save $60 a month.
Yeah.
I mean, what?
Yeah.
That they're going to have their $10,000 better served other places than to save $60 a month.
Yeah. I mean, they're better off, especially if they're renting. To buy something a little less expensive, get out of that rental circular pattern they got going, because all that money, that's just flushed down the drain, right?
Yeah.
At least if you get into something, even if it's not your dream home, get into something where you start building equity, right?
Yeah, absolutely. So that's a good point, though. Okay, so with everything being at the height of everything being at the height of the market, Monica, what do you think as far as like how long should a buyer keep their home in order to actually gain equity? Do you see the market continuing to rise? Because if you look at the rate of the equity that has risen in the past couple of years, do you see that still continuing to happen, or do you see it stagnating? Is that a word?
Yeah, it is a word.
Yeah.
It is a word.
Leveling
It is a word.
off.
Yeah.
Whatever. Yeah.
I think it's towards that traditional way that real estate used to be. I would tell my clients, and this is before everything, that yes, buy real estate. It's always going to appreciate. No problem. Then we had 2008, in which we didn't know when it was going to stop going down,
Right.
but it's come back up. So what I would tell buyers, I believe the market is still going to go up. Nothing like what we've seen in the past. Who could have predicted that?
Nobody.
And we can't really predict the future, but I do believe that real estate is still an excellent source to build wealth. It's an excellent source to have an investment. When my clients purchase a home, I tell them, we're looking at it as this is where your family's going to live, but it is also an investment.
A savings account, so to speak.
Yes.
So
absolutely.
do you think that as a first-time home buyer, you should stay in your house a minimum of 2 years, 5 years? You know what I mean? Because I always ask that to my buyers when I was like, how long do you plan on staying? And it will help me determine what type of a loan I'm going to put them on. Do you want to buy your rates down? Your points or whatever to buy those down. So from a real estate perspective, and with the market increasing the way that it is, in order to get a return on your investment, what do you think the minimum, maximum? And obviously we can't predict the future, but just based on the trends that we've seen over the last 2 to 3 years and what we predict going forward, do you think you need to stay in at a minimum of 2 years just to break even? Minimum of 5 years?
With that, I look at the areas a lot of times.
Yeah.
And I tell them it's based on what that area is going to do, because some areas have a ceiling.
Yeah.
In which if you're buying at the height of the market, you're not going to get your money back in this particular
Right.
market. And I've got a few clients who have done that. They have money to spend, but they fall in love with that thought of, I pay less a month, as opposed to when I sell, I'm going to make more if I'm in this area.
That's a good
as
point.
opposed to this area.
Yeah.
And so for me, a lot of times I'm looking specifically at the areas and also the amount of money. Right now, with people paying above these ridiculous amounts of money, it's very hard, because my thought is, I tell them, we're going well above asking. Within 5 years, will you be able to sell this house and at least break even? We're not even talking about make a profit.
Well, this has all been so very interesting that we kind of went over a little bit, but that's okay. I want to thank Monica Howard for coming in, and I want to thank Dione Oliver, and she's the mortgage lady, I can't say it, from Guaranteed Rate, and Monica Howard from Prime Real Estate Agency in Flint Township. You can reach out to either one of these two and get more information. We're going to have her back on again,
Absolutely.
too. So I want to thank our sponsors, HAP, Financial Plus Credit Union, Shea Automotive Group, Guaranteed Rate, and 103.9 The Fox. And I want to remind our listeners, you can get a hold of us at discoverflinttownship@gmail.com, discoverflinttownship.org, or no, discoverflinttownship.com, flinttownship.org, and then our Facebook. And I'm Tracy Tucker. I want to remind everybody, stay safe, stay healthy, shop local, buy local, and discover Flint Township. We'll catch you later.